Hello and welcome to this short video on scalping, which is basically a very short-term trading strategy where you're looking to get in and out of the market and capture a small move. The main attraction to this sort of strategy is that because you're not in the trade for very long, then your risk in theory is reduced, and there's also less chance that you get some untoward news which comes out and moves the market away from you. Scalpers will typically trade several times a day and look to record a series of small wins which taken together can lead to a sizable gain. Now, this is important to stress. When you're looking to scalp, you're not looking for big moves, and therefore in terms of your risk, you shouldn't have too wide a stop loss. Okay, so if we look now at the German DAX or D30 on xStation, I'll run through a strategy in a moment, but the first thing I want to point out is that if you're looking to trade for a scalping strategy, then in my experience, it's best to just focus on one market. So for this example, I'll use the D30. Now, this is important for two reasons. Firstly, trade size, and secondly, stop loss placement. When you're scalping, what you want to do is consistently use the same size so you have equal exposure on each trade. You don't want to be in a situation where you have 3 winning trades on a small size and then 1 losing trade on a much bigger volume that wipes out all your profits. So when it comes to choosing your position size, the best way is to use a trade ticket and initially do this before you've even looked at the markets and started to eye up strategies and entry and exit levels. So if we use a trade ticket here on the D30, you can see what we'll do is we'll tick stop loss here, and if we go buy, just for instance, just for this example, I'm going to choose a nominal amount which will basically be my exposure each time. So let's say, for instance, trading the D30, I want to have 15 pips. So if we go 15 there, you can see if I'm trading on a one lot risking 15 pips, that would be £322 roughly every trade. Now, 15 pips isn't necessarily optimal. I'm not saying this is the best size to trade for this in terms of stop loss placement, but I think it's important to have consistent rules in place how wide your stop loss is going to be, because when you're scalping, you're very active and you're looking to be in and out of the market. Not all trades will go as far as your stop loss. You may choose to exit them manually before that, but it's always good to have a stop loss in place on all your trades as a kind of safety net, which does reduce your downside exposure if something bad happens. Okay, so if you are trading, let's say with 15 pip stop loss, and you want to also decide before you enter the trade how much you're going to risk in each position. If £322 is too small, then you can toggle the volume down and you can see that obviously the exposure will reduce, keeping the pips stop loss at the same level of 15, or you could obviously toggle it higher. So let's just say for this instance, we want to have a stop loss of £100. Let's say we go for around 0.3 volume. You can see that's 96.52. 0.31 gives us 99.74. It's as near as damn it to £100. So we'll now decide to trade with 0.31 volume. You can see this is already updated on the chart. So if you look to buy and sell here, we've got 0.31 in place for you. Now, turning to the strategy, I want to talk about parabolic SAR now. Just a reminder, this is obviously a 5-minute chart of the D30. So this is a very simple indicator, and with the SAR standing for stop and reverse, you're simply looking for where the dots are in relation to price. So if we add the indicator here, parabolic SAR, and you see these blue dots come up on your charts. What you simply look for is when the dots are below the market, that's a buy signal. So you can see here, this was a buy signal. When the dots are above the market, that's a sell signal. You look to enter short. Always keeping in mind that you'd be having a stop loss place of around 15 pips. Now, you can see, for instance, if you'd entered long here, you could have caught quite a nice move higher. When the market rallied around 45, 50 pips, you might not necessarily be looking for as large a move as this. You may say you're happy to take the equivalent profit as you are risking. So just look for 15 pip moves or 15 tick moves. But you can see how it worked quite well there, and it also worked well on the way down and this way higher. So what you can see is that the market works well in these volatile big moves. However, when the market is a little bit less volatile, and you can see we've got smaller candles around here, it doesn't work so well and you're going to get more false signals. For instance here, if you would have entered a stop long here, unless you took profit around these highs when we were less than 15 pips on side, you'd have probably got subsequently stopped out when the market fell down lower. That's why it's important to have a stop loss set in mind, because you can see here, if you were going long at this point in time, you didn't take profit, the market did actually decline quite a bit after that, and you don't want to be riding this all the way down and losing 50, 55 pips. There is another filter that you can use on this. So rather than simply saying are the dots above or below the market, what you can look for is examples where you wait for 3 consecutive ones to print. So for instance, you can see we had 2 dots below the market here. This could have been sizing up for a buy signal. However, because we didn't get the 3rd dot, this is just a short-term blip and you wouldn't have entered long. More recently here, you can see we also had 2 dots above the market, which could have been lining up for a sell signal. However, we didn't get the 3rd dot. So if you do use this filter, you'll basically be a little bit slower to enter the market, but you won't get as many false signals. You can see just in recent moments, actually, the market had been printing these dots below. We'd have more than 3. I think there's 1, 2, 3, 4, 5, 6, 7 below. But you can see just now these dots have pushed above, and we've now got 2 consecutive dots on the upside. So if we get a 3rd dot on the upside here, this could be seen as a sell signal. And again, you could therefore look to enter short a stop loss, let's say your fixed amount away, whether that's 10 pips, 15 pips, whatever you decide. Okay, thanks for listening. I hope you found this video helpful. And if you'd like any more education on this topic, please don't hesitate to contact your account manager or myself. You can contact me on my email at david.cheetham@xtb.com.